Morning everyone, welcome to another RF Crypto video. Today we're going to be speaking a little bit about the general market itself. We're going to have a look at the Bitcoin chart, see how it's doing. Also a little bit on leverage and the fact that higher inflation could lead to the price of Bitcoin even going lower. After that, we're going to be speaking a little bit about Metaverse, how Binance is building an office in the Solana Metaverse, how Samsung launched a Metaverse store in Decentraland, and how Disney patented technology for a theme park Metaverse. We're going to end off with Arbitrum Network's minor outage. Arbitrum Network is the biggest layer 2 solution at the time of this video. The markets are currently up by about 1% or so. Nothing has been happening since yesterday, but during the weekend, the crypto market fell by about 8 to 10%. Bitcoin price was around 44, 45, sometimes 43,000, and then it dropped all the way down to 40,000. But today we're seeing some corrections upwards, with Bitcoin seeing a nearly 1% improvement, Ethereum nearly 2%, Dogecoin, which is a meme coin, as you know it, almost 7%. So it's mostly people buying the dips, but market activity still remains quite low because people are still fearful. There's still a lot of uncertainty, especially going into Wednesday when the US is going to announce the official inflation figures. Looking at the Bitcoin charts, I had said before that the support level was down at 40,000. So the next support level is at 40,000, and we can see that the price of Bitcoin is playing around the support level. Whenever it reaches almost 40,000, it gets bought up again, and we can see it here again. So it is consolidating at the moment. It's trading laterally, a little bit upwards, but we can still consider this laterally. However, tomorrow we'll have the inflation figures. And since leverage is still high, I believe that if the price of Bitcoin breaks the support level and goes below it, we can see a crash all the way down to maybe between 30 and 35,000. So it's important to keep an eye on this lateral movement, whether it's going to reach the support level or not. It might reach the support level and shoot up if the news is good, and it might reach the support level and then keep going down if the news is bad, if inflation is higher than expected. So the reason why the price of crypto fell over the weekend since Friday is because the job reports was disappointing. The US job reports is a temperature gauge for the whole economy. If the number of new jobs created is less than what was expected, then it's a bearish signal. It's the signal that the economy is not doing so well. You might be thinking, I'm living in Europe, I'm living in Africa, I'm living in Asia. Why does US job reports matter? It matters because the US economy is the most influential economy in the world, and if that economy sneezes, the whole world catches a cold. It's as simple as that. Just 199,000 jobs were added in December. It's significantly less than the economists expected. The S&P ended down by 0.4% and Nasdaq fell by 1%. And Nasdaq is mainly composed of high-tech stocks, and we know that crypto is highly correlated to Nasdaq. So if Nasdaq rises, crypto rises. If Nasdaq falls, crypto falls. Always an amplified effect. So if Nasdaq fell by 1%, Bitcoin fell by almost 6-7 times that, and the crypto market in general fell by almost 10 times that. Despite the fact that the jobs created weren't as much as expected, wage growth was strong. It was at around 4.7%, and the unemployment rate has decreased to below 5%. And it decreased by more than expected, and it puts the Fed on a more hawkish trajectory with rate hikes. If the economy is doing very well, that means that expansionary monetary policy, which is low interest rates, are no longer necessary. So the Fed has more options in the sense that they can rise interest rates more than they expected, and we expected the Fed to increase interest rates twice in 2022. Actually, we expected interest rates to rise 0 times in 2022, and then it went to twice. And now with this news, the expected increase is 4 times. So we expect interest rates to increase 4 times in 2022. So once every quarter. Also, the yield on the benchmark US 10-year Treasury bond rose to about 1.77% Friday after the jobs report. And this is not good for crypto or stocks, because if the yield on the benchmark or on the US Treasury 10-year Treasury bond rises, that means that the stock's present value is lower. How is a stock value calculated? What they do is they estimate the future cash flows of the company, and then they discount it to the present value using this 1.77% US 10-year Treasury bond benchmark. So the higher the discount rate, the lower the present value. What happens here is the bond benchmark rate rose and the present value of stocks went down. This means that the portfolio of traders went down as well. And this caused traders to move from equities to safer assets like bonds, which are offering high returns now, and also cash and fixed deposits and unit trusts. And despite the fact that Bitcoin is trading now at around between 40 and 42,000, and if the inflation data on Wednesday is not favorable, we can see a drop in the price of Bitcoin. And it is believed, because Bitcoin's next support level is 40,000, that most of the long leverage traders set their exercise price at 40,000. So if the price goes below 40,000, a margin call will be executed and those positions will be liquidated. And if you look at the leverage ratio at the moment, it dropped by a little bit in the past few days, but it still remains at almost all-time highs. If you look at here, just compare it to last year and the year before, still at all-time high. If we see leverage dropping from 0.21 to what it was in the 4th of December when the price of Bitcoin crashed from 69,000 to about 50 something thousand, then we'll see a massive drop in the price of Bitcoin. The price of Bitcoin will drop because of the sell-off, and then it will drop further. It will be amplified because of these liquidations of leveraged positions. So leverage is still all-time highs, and these are split 50-50 between longs and shorts, more sort of 52% long. So a lot of leverage positions hoping that the price of Bitcoin will go up, but it seems like it won't be the case if the inflation data is unfavorable. And so market experts warn that higher inflation could whip Bitcoin price to 30,000. Bitcoin may end up falling to as low as 30,000 if the US inflation data to be released on Wednesday comes any higher than forecasted. The market expects the widely followed CPI, so that's what measures inflation, to rise 7.1% for the year. So if it's higher than 7.1%, we can expect the price of Bitcoin to go down. This is because crypto assets are at the furthest end of the risk curve. So between all the assets, bonds, equities, cash, gold, and crypto is the riskiest. And because of that, they had benefited from the Fed's extraordinarily lax monetary policy, which is quantitative easing or buying of bonds, and also low interest rates. And it should suffice to say that they would suffer as an unexpectedly tighter policy shifts money into safer asset classes. If things are good, and there's a lot of money being pumped into the market through quantitative easing and low interest rates, that cheap money, it will flow into crypto, it will flow into riskier assets. However, if this is reversed and the market becomes riskier and things aren't looking so good anymore, then why would they hold risky assets? People are going to panic. They're going to remove all their money from riskier assets such as crypto and move it to bonds and equities, which are safer. So Mike McGlone, the senior commodities strategist at Bloomberg Intelligence, called $40,000 an important support level in the Bitcoin market. This is what we said earlier. Furthermore, he anticipated that the cryptocurrency would eventually come out of its bearish phase, which it is in a kind of a mini bearish phase now, as the world becomes digital and treats Bitcoin as collateral. And don't forget, the world is becoming more digital. Everything is becoming more into the metaverse. More companies are holding Bitcoin as part of their balance sheet, and the supply of Bitcoin is limited while the demand is growing. So the only way is up eventually. So Binance US is building an office in the Solana Metaverse. They're building a space in Portals, which is a metaverse platform built on the Solana blockchain. And this Portals recreates dense urban environments where users can explore buildings and interactive rooms. And they're getting a space in the downtown part of Portals with a focus on delivering the latest news, charts, and events virtually. And it's not only Binance that's doing this. The US arm of FTX will also build its own office in Portals. So it seems like all of these exchanges like Binance and FTX and others will follow as well are going, instead of going into Ethereum-backed metaverse, they're going into Solana-backed metaverse, which is seen as more scalable, and this makes sense. And they're building offices and interactive rooms in Portals. And traditional companies have made a beeline for the metaverse in the past year. Facebook, for example, it's massive. And there went a major rebrand and became Meta in a broader effort to lead metaverse-based application. And we'll see how this pans out. In other metaverse news, Samsung launches Metaverse Store in Decentraland. The Samsung Metaverse Store is a replica of a real-world store, which is a very famous Samsung store situated in New York City Meatpacking District in Manhattan. And the Samsung 837X shop will now be accessible in the metaverse for a limited time. And in this metaverse store, they will be able to purchase NFTs, and be part of a lot of interactive activities for a limited time, of course. And Samsung is heavily going into the metaverse because they released a new smart TV range with an integrated non-fungible token or NFT platform. And micro LED, Neo QLED, and the frame are just a few of Samsung's 2022 smart TVs that will have an NFT platform app for discovering, purchasing, and trading NFTs. So just imagine, you'll be able to buy, sell, and trade your NFTs on your TV. Disney patents technology for a theme park metaverse. So Disney has been approved for a patent that would create a personalized interactive attractions for theme park visitors. The technology would facilitate headset-free AR attractions at Disney theme parks. And this technology would work by tracking visitors using their mobile phones and generating and projecting personalized 3D effects onto nearby physical spaces, walls, and objects in the park. So they're basically bringing the digital metaverse into the real world using AR. And there are 12 official Disney theme parks worldwide, and they generated a total revenue of 17 billion with its parks, experiences, and products. Just imagine, if the metaverse goes into Disney, that's $17 billion unlocked that could flow into the sector of the blockchain industry. Finally, Arbitrum network suffers minor outage due to hardware failure. What is Arbitrum? It is an Ethereum layer 2 network using optimistic rollups, which is similar to ZK rollups, which batches up transactions for faster and cheaper processing. So what they do is, you and I use this application, a layer 2 solution. They batch all the transactions in their own network, and then they put it all together, and at the end of the day or at the end of an hour, they send it to the main layer 1 Ethereum network as one transaction only, which makes it cheaper and quicker. And according to layer 2 data platform L2Beat, Arbitrum is the most popular layer 2 network at the moment with the TVL of 2.57 billion. It has a market share of almost half in the L2 market. Arbitrum, so coming back to the point in question, Arbitrum has suffered its second outage in less than 5 months following a hardware failure. At the time, it reported that it was experiencing some issues with the sequencer, which prevented transactions from being processed for the period which the outage was on. It is understandable that they will have some outages and there will be some problems because the Arbitrum network, despite its size and despite its market share, is still in beta mode. And they'll keep this moniker as long as there are points of centralization that still exist in the system, because they'll maintain the protocol in a beta state until it's fully decentralized. And this follows the fact that the team concluded that it was working on further decentralizing the network with a twofold path of minimizing sequencer downtime that will be deployed in the coming months and weeks. And this is very important because Arbitrum now leads the layer 2 market and they're still making improvements every day. And the fact that the crypto market and the blockchain industry is dead set on decentralization, and the fact that Arbitrum is still quite centralized, and it being a leader in the layer 2 solution is big, because once they become decentralized and once these efforts to decentralize materializes, then I believe that the value of their company is going to maybe tenfold. So the previous outage was in mid-September, and it was also a sequencer outage when a bug caused the system to get stuck after a large batch of transactions was executed over a short time frame. So this isn't a big deal. It's just to point out that no system is perfect and there are bugs to crush. Despite this, layer 2 solutions are gaining a lot of tractions. ZK rollups, for example, as I said before, went from a $50 million industry to a $50 billion industry in less than a year. And it's important to see how ZK rollups behave in 2022 and how the adoption will take place, because there will be adoption to ZK rollups because it only makes sense given the delays of Ethereum 2.0. And with that, we come to the end of today's video. Thank you for watching. If you like this video, please leave a thumbs up, please hit the subscribe button, and please share this video with your friends and family. I'll see you tomorrow for another one. Invest wisely and cheers.